Well, it's been a very difficult year for consumers already, with inflation going up so much and the cost of living going up so much with it. It's been very difficult for investors, with stocks and bonds going down at the same time. It's been very difficult for central banks. A year ago, they were criticised and told not to raise rates. The economy wasn't strong enough. Now they've been criticised to being told, why didn't you raise rates? Raise them now, raise them higher, raise them faster. In fact, James Bullard at the Fed in St. Louis has come out and said the only way to stop inflation would be to raise rates so far, so fast as to put the brakes on growth. So now people are talking not about inflation being the problem, but a recession, a growth problem. And this has brought back memories of the 1970s and the stagflation world, where you get the economy stagnating and inflation at the same time, the worst of both worlds. Of course, that was a terrible time for investors in the markets and for households. The question now we ask is, could rising rates cause that recession? Well, we look back in history at the last 15 cycles in the US since 1950, and we ask, how often did rising rates cause a recession? How long did it take to cause that recession? We find that the 15 cycles, in 4 of them, we got a recession in the first 2 years. In another 4, we got a recession in the 3rd year, and 7 of the recession happened after that 3rd year. So there's no direct timing link between raising rates and recessions. It matters what else is happening in the economy. What's happening to jobs, to wages, financial system, debt levels, all those things. Where are we now? Well, unfortunately in Europe, we've got a war on our doorstep. There is a non-zero chance, a significant chance of an energy crisis, of a full stop to Russian energy, causing a full-blown recession in the Eurozone and the UK. In China, we have the government trying to lock down to stop COVID and take money out of the property system, which is very over-levered. The good news is in the US, though, the consumer is very, very strong. Despite all the bad news, their balance sheets are very strong, with years of savings from the COVID period, with rising wages and rising house prices. And the US consumer is 70% of their economy. So we think the chance of a recession in the US or globally are pretty low right now.